Hello and welcome everyone to the week ahead commodity report for the 29th of July to the 2nd of August, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we go into next week? We have indeed seen hedge funds and money managers over the latest week. They have in fact cut their overall net long positions on both gold and crude oil, which is quite interesting as we go into next week because of course we have the FOMC statement and also Friday's non-farm payrolls. Over the latest week, gold prices did consolidate, gold actually slipping to 1 week lows on Thursday as soft US inflation numbers that kept bets alive so far for an interest rate cut as we go into next week's FOMC statement. Gold prices still getting supported by expectations of monetary policy easing from leading central banks, and of course we had weaker second quarter economic growth, which is keeping bets alive for an imminent interest rate cut. However, we want to see how much of that has been priced in already, or whether we see the Federal Reserve go ahead with a more aggressive monetary policy stance. So we'll be watching out for that next week. We have also seen oil prices inching up slightly higher on Friday, ending the week higher after stronger than expected US economic data has brightened the crude oil demand outlook. We've also seen support come in for oil again on concerns over the safety of oil transport around the Strait of Hormuz, which of course has been threatening supply. So with that, we'll move over to the charts and we'll talk you through the key levels and what we're forecasting as we go into next week. First of all, starting off with gold, you want to be aware that hedge funds and money managers, they have reduced their net long positions on gold in the latest week. We mentioned last week on Gold Asset of the Day that we were looking for support to be coming in around that 1410, 1415 zone and look for opportunities to trade that back towards the upper end of the range. In fact, last week we had quite a tight range on gold. So we just broke down to 1,411 US dollars per ounce was the low of the week, and the high of the week was 1,433. So you can see the price action at the moment. It is consolidating. We also have the FOMC statement on Wednesday where the Federal Reserve are expected to cut interest rates. A 0.25% interest rate cut has been priced into the market, but we want to see whether they will go ahead with a more aggressive interest rate cut. So we're watching out for that, of course, on Wednesday's FOMC statement. And then Friday, we have the non-farm payrolls. Normally over the month of August, gold does perform very well. Of course, we're then moving into the wedding season in Asia, where you tend to see gold imports increase in Asia, and overall gold over the month of August does tend to get well supported. But we still have to get through the end of July here, and normally at the end of July you do see profit taking on gold. There could be a pullback around the FOMC statement or the following day as we get closer to non-farm payrolls, but then setting up for a potential opportunity as we progress throughout the rest of August. You also want to watch the inverse correlation with the US dollar as well. The US dollar broke out to 2-month highs on Friday. That will tend to put pressure on gold, but if the US dollar starts to correct and pull back, that is where gold could start to springboard higher. The levels that you want to be aware of going to next week is first of all the weekly lows here. So they reside at the moment at 1,411 US dollars per ounce. If we were to roll over and we tap and break below that zone, you've then got support coming in just above 1,400. Really, gold, in order to maintain the current price structure here and this overall upward trend, would need to hold above that, ideally on a closing basis, in order to suggest that there's still a higher low in place and gold has the ability still to springboard higher, make a move back towards the upper end of that channel. So a lot of the recent price action here, although we've seen consolidation and pullbacks, we've continued to see higher lows for gold. So each time there's been a pullback, it has actually created a higher low, which has given us an opportunity to continue to buy in. That said, if we were to roll over, break down and create a lower low, that is where gold could start to correct more significantly. We're not seeing that at the moment, but just be mindful of that for gold right now. It could be that going into next week, gold does not pull back much. It creates a bull flag here, and very simply from the Sunday through to the Monday, we start to see a retracement higher for gold, start to build up some momentum and then take the price back above 1425, 1435, and then start to make a move back towards a recent swing high. So that is also one scenario to bear in mind as well as we go into next week. But with the Wednesday's FOMC statement, Friday's non-farm payrolls, we will be putting out a fresh gold asset of the day with our forecast for the week ahead on Tuesday. So make sure, if you haven't done so already, that you are subscribed to our YouTube channel to get more details on that as well from the middle of next week. Moving over also to silver. I've had quite a few questions on silver in the latest week, given that The previous week, silver prices broke out over 8%. In fact, silver prices off the lows here from May up over 16%. So if you consider that we were trading near to $14 per ounce and recently broke out to $16.50 per ounce, it's been quite an incredible run so far with silver. A lot of that move happening over the month of July. However, we are looking like we might be getting ready to pull back slightly lower. There is strong correlation between silver and gold prices. The gold-silver ratio broke down considerably in the latest week. Where we are right now, if silver starts to pull back, so if it was to break back below the lows here from Wednesday, Thursday and Friday, start to correct more significantly, I'd watch that because silver could start to sell off first and then you could see gold start to follow suit later on. However, we want to see whether it will just be a shallow retracement here for silver and then whether it starts to get supported if it was to pull back, to example, to the 16 level, if we then see it springboard off that zone, or whether it might turn into something more significant. That is if silver does start to correct. It would need to break below Wednesday, Thursday and Friday's lows to see that happen. Otherwise, we may start to consolidate again, go into next week and have another reattempt to break back above 1650 to 1665, which is the recent swing highs, and then making a move back towards 1675, and then of course above that would be the 17 level above that zone. But it is looking a bit vulnerable going to next week to profit taking ahead of the FOMC statement. Non-farm payrolls, of course, on Friday as well. Normally gold tends to perform better than silver over the month of August, but over the month of July, silver typically performs better than gold, which it has done over the latest month. Then moving over to crude oil. So WTI crude oil has been also within a tight range over the latest week here. Again, the highs of the week on Wednesday and the lows as well. So we had the high at $57.62 per barrel and the lows there coming in at $55.32 per barrel. So we also have a consolidation and a pennant formation developing here, which is indicating some indecision right now for oil prices going to next week. But I am mindful that hedge funds and money managers, they have reduced their overall net long positions in the latest week. I'm not ruling out a potential breakout on the FOMC statement depending on the impact of the dollar. If the dollar was to sell off on or after the FOMC statement, it could provide some support with oil. Oil does normally tend to perform quite well over the month of August, and at the end of July we can see some consolidation and pullback. If we were to revisit the lower end of the channel here, what I would be looking out for would be a tap of $55 per barrel, which is quite a magnetic level for crude oil prices, and then at that zone look for evidence of buying to come in. If we didn't see evidence at that zone, I'd then look for a revisit back towards $54 and again be looking to see whether that major previous level of resistance which we formed going back to June then provides support, and if we see then the opportunity to get in at a lower price with a view to take the price back towards that 57 to 60 US dollar per barrel level. So we want to see whether we are going to break below the Friday's lows and weekly lows and make a move back towards 55 to 54, or whether we're going to be able to springboard higher, build up some momentum here and make a move back towards 60 US dollars per barrel, the upper end of the range. We have API data coming out on Tuesday, oil inventories data coming out on Wednesday, Wednesday's FOMC statement, Friday's non-farm payroll. So there'll be plenty of news items and geopolitical news as well, which we'll be keeping an eye on as well for oil, which will really give us confirmation as to which way we should be looking to trade this going into next week. So with that, it's very important when you trade that you do have a research-driven process made up of 3 key stages where you are looking at what the smart money is doing, hedge funds and money managers in the market. You marry that up with market sentiment, trade flow, combine that with fundamentals, geopolitical news, then looking at the technical to generate a trade idea which gives you an edge in the markets. In fact, on that point, I'll just move over to platinum, and I want to congratulate all of you that caught the move that we have been highlighting here. If you go back to our YouTube channel, watch the videos going back to the end of May and beginning of June, because last week we banked 650 points on our platinum long position. We identified to you that this was a great opportunity around the 800 to 810 zone to look for buying opportunities at that zone. It's worked time and time again for us throughout 2019 to be buyers of platinum around that 800 to 810 US dollar per ounce zone. We've seen it again, another breakout all the way up to just shy of $900. In fact, we tapped 889 US dollars per ounce just last week on Friday. So again, congratulations to those of you who capitalized on the platinum trade. That has been very profitable to us, banking 650 points profit on that trade last week. So finally, if you would like to learn a research driven approach to the markets, there is an opportunity to join us at the Gold and Silver Club and just have a think about it yourself. What is your edge in the market? So with that, if you would like to join a community of successful traders and learn a research-driven approach, you get access to the following. You have access to exclusive live trading room webinars. You get real-time trade alerts as well as real-time trading research and market insights. You have access to our private members academy website as well as support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.